Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. The London real estate market data is out for the month of December. It was actually out last week, but I was on holidays, so I'm a little late coming to the table, but I do want to get this data out there as I think there's some really important insights to be gained for the rest of 2022. For its part, London set new records yet again for the average price and the median price of a home in London. So I want to get into that data as well as some of the more interesting data with numerous multiple offer situations occurring throughout the London region. So what I want to do today is go over the data from December, go over why these prices are shooting up so much, especially in the month of December when you wouldn't expect so much in the winter months, and go over what these prices tell us, what we can see, what we can look forward to throughout 2022. We will have more updates out next week as Stats Canada is set to release its inflation data, so that will probably have a direct effect on the pace of interest rate hikes, which will have a direct effect on London's real estate market, probably. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into this data. So first off, the average price of a home in London. In November, that price was around $671,000, and that shot up just shy of $700,000 at that $694,000 range. So we saw a $23,000 increase month over month between November and December in the average price of a house in London. So it's definitely continuing to shoot up, and we saw that major in December. Now, as for the median price, which also continued to shoot up, the median price, remember, that's half as many of the homes sold were under this price and half as many were above this price. In November, that number was at $637,000, and that shot up to $655,000 in the month of December. So half of the homes sold were under $655,000, half were over $655,000. Definitely unheard of in the Forest City. Now, the next major indicator that I think points to what we're going to see in 2022 is the sales to list price ratio. That's how much a house sells for over or under ask. So if a house was listed for $100,000 and it sold for $105,000, the sales to list price ratio would be 105. So that number also shot up in the month of December. In November, that number was 112.5, and that shot up to 115.2. So if a house was listed at $100,000, it would actually go for, after all the bids, after all of the offers, would go for $115,200. Obviously, no houses are listed at $100,000, but this kind of gives us an idea that the bidding wars that have characterized the last few years in London, the multiple offer scenarios, are just continuing to heat up and heated up even more in December. But the big question is why? Why did the price continue to go up in December? And I think there are three main interacting reasons why the prices went up so high in December, aside from all the other reasons that they've continued to go up throughout the past few years. The first main reason is the months of inventory. So in December, the months of inventory available was 0.2. So that means if no more listings came to market after 0.2 months, we would have nothing on the market. We'd have no new listings. Everything would be bought up. That's how fast a pace everything was being bought up. Secondly, I think the writing is on the wall for the end of cheap money in Canada. The Federal Reserve and the Bank of Canada have both predicted, and there's been numerous analysts that have said that we're going to be looking at multiple interest rate hikes throughout 2022. Many have said that we could be looking as much as 3, 4, 5 interest rate hikes throughout the rest of the year. So I think people, knowing that money is going to be much more expensive as time goes on, are rushing in to get those rates locked in before money gets more expensive. So I think there's a lot of stress on people to get into the market before we start to see these rates go sky high, or sky high in relative terms. They're still relatively low by historical terms, but before they go sky high compared to what they were. Although the Bank of Canada hasn't raised its rates, we've definitely seen it on the brokerage side and on the bank's side as well, that rates are gone up and up and up. So I definitely think we have this small amount of inventory, this 0.2 months worth of inventory available, and we have a ton of buyers rushing in to buy up that inventory. It's going to push the price higher, and that's borne out by the 115 sales to list price ratio that houses are going almost 15% over ask on average. Finally, the government signaled in December that they are going to start to bring the hammer down on the housing market, mainly on real estate investors. Real estate investors, as we know, constitute a large part of the London, Ontario real estate market. So as the government signaled that they're going to make it much more difficult for real estate investors to buy up properties, I can see a lot of real estate investors, again, same as the first-time home buyers, same as the normal home buyers, rushing into the market before the government changes the rules. So we have home buyers and we have real estate investors all rushing into a market that has very, very little inventory because it's December. Historically, we have very low inventory in December, but we also have a flood of buyers trying to rush it in before the rules change, before money gets more expensive, before the government changes the rules. So I think when we have all these three factors in mind, we see that 115% sales to list price ratio. We see these multiple offer scenarios, and we see a average home price in London nearing $700,000. As somebody that was born and raised and grew up in London, as I'm sure many of you were, this is unreal. This is craziness. It's just, we never thought that we'd ever see anything like this in London, Ontario. That's for sure. The big question on everybody's mind is, great, when does this change? Especially a lot of people that are still trying to get into the market. Great, when does this cool? When do these new rules come into effect? On the real estate investor side, Parliament is set to sit on January 31st. That's when they return from the winter break. So after Parliament sits, we should start hearing more and more announcements as to when these new rules are going to come into place. Incidentally, they're also talking about an end to blind bidding combined with the new rules for real estate investors, but we really won't know the timeline until Parliament is back in session. So we should have a better idea of that in February. We do know that interest rate hikes are coming. That's, never say 100%, especially in this era, but we do know that interest rate hikes are coming. The Bank of Canada is set to meet on January 26th. They probably won't raise rates quite yet. I assume they're going to follow the Federal Reserve. The next time that the Bank of Canada meets will be in March. And depending on the inflation rate, depending on the unemployment rate, if we see sky-high inflation and employment's around that 3-4% range, you could very well expect to see a rate hike come March. Again, it's really going to depend on the data. It's going to depend on how quickly the Bank of Canada thinks it needs to tamp down that inflation rate. We are getting the inflation update out next week. And we'll definitely have updates on that, and we'll have updates as the Bank of Canada comes out and provides its forward guidance and gives us any ideas of when we can expect those rate hikes. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.